All right, good morning, good afternoon, good night. Today, this is going to be a long one, so we're going to talk through, at a high level, how these setups tend to play out and how we look at how I would trade the day today or how I trade the day today. All right, so the first thing I do is I look at this overnight setup, all right, and then I plug this data into the statistical database. All right, and the first thing we look at is high of day, low of day, low of day times, high of day times. We kind of look at all of this data. We also want to see what the statistical chances are to hit certain targets, right? So the first target we're going to look at be the midnight target. So the midnight target is right here, right? It's down at 24,838. All right. And then we flip back over and we can look at the middle of the 12-hour, 98.9%. So 99% chance that we're going to come down to here. So we know that we're probably going to try to drive down, maybe pop at the open, drive down and get this target and possibly try to reach down here. So we jump back over, look at data again. High side has a 79.12% chance, but if we look back, we already got it. We got the high side of the 12-hour. All right, so if we go look at the low side of 12-hour, 83% chance. So there's an 83% chance we're going to come sweep this. All right. So now what we want to do, so knowing that, what we want to do now is we want to zoom out, start looking. Now there's a lot of stuff on this chart. I'll explain it. But what we want to look at is, what do we have setting up here? Right. So I like trading harmonics. So if we go back over to the data, one of the things this data is telling us time-wise is that we are most likely going to put in the low of day at the open, and for the first hour and a half or so, probably going to drive down with the possibility of continuing that drive down past that, right, for the next hour and a half, right? So possibly 3 hours of coming down. And that's, there's a possibility to pop at the open, which is good. And this is how I look at harmonics to help me with this. I look at a handful of things, but harmonics, I look at the data, and I also look at standard deviation. All right, so if we flip back over here and we start looking and we zoom out, what do we have harmonic-wise? We got this double top up here. We know that we want to try to go sweep that at some point, but if we start looking at our setups, we know this thing's going to drive down. What do we have setting up that's going to take us to the upside? So the first thing we're going to do is we're going to go back over here. We're going to look at these kind of high of day zones, the low of day peaks that we have here. All right, and we're going to mark them. We're going to map them out on the screen. So here they are. Our first high of day, second high of day, which will give us that sweep if we need it. And here are our 3 low of days. All right. So what are we looking at? Well, harmonically, we have a few things. A bigger pattern that I wanted to see play out today is I wanted to see, because we knew we were going to drive down for so long possibly, I'm going to start mapping this out, that we're going to sweep this low at some point and continue down to try to nail this deep crab. All right. So that was the main thing that we were looking for today. Now, in doing that, because we know how harmonics work, what we have to know is, what are the possibilities that could go against us? All right, so if this thing at the open is to pull back and hit these targets we talked about, sweep and sweep, we know that we can get that 5-0 recovery for a shark. I'm sorry, 5-0 recovery for a shark. We know that we can get the 1-1-3 recovery to set up a shark, right? And the shark being this here. Oh, 1-1-3 would be down here. So, and then we could set up this 8-8-6 that could pull us back and possibly drive higher. We know that that is a possibility, right? And so if we continue up, we know that this thing could turn into a deep crab, push up to the 1-6-1-8 or higher, squeeze out the 1902. Now, also, we have this pattern kind of setting up here, right? So we know that we want to go sweep this, but if we hold that, we could also set up a bat, right? So we could also even call this a 786, but the bat fits our high of day target, which is important, right? That's where we want this thing to squeeze to. We want to get these high of day targets. So if you notice the 886 of this small pattern and then the 113 of this larger pattern, if it sets up, that's going to give us these high of day targets. So that's what I'm going to look for. If we're going to pop and it's going to go against me at the open, I want to know the places I need to look for rejection for ads, to bring my dollar cost average up so I can take the market back down, if that makes sense. All right. So because we know the NQ can leave without us, we want to take the short before the open. At least that's the way that I trade it. I don't mind dollar cost averaging when I have a plan and I have an idea of what I think the market's going to do, because again, the market is going to try to drive down. The data's telling us this, right? Every 30 minutes is a new potential low. All right. And this is just historically. Now, it doesn't mean it's going to happen, but this is what the statistics are telling us. So if we were to take that trade, we're going to take it before the open. All right. So, and we know we're going to add up here on this 886. If we pull back and we start to pop, are we going to go red? You have to have all that. I would be willing to go red knowing that I'm expecting this market to try to pull through these areas. So, and depending on how you trade, you have to figure out the profit areas, but we'll talk about those as we get this particular pattern. All right. So we have we're not going to take any shorts or longs or anything. We're just going to talk through this setup. All right. So let's see. We've talked about this. There's a bigger pattern up here, which we talked about getting the 113 on. All right. So now we're just going to say, okay, we took our short. Right. So we'll start to play this market out. We'll get into the open. And here we go. We get our pull. We get our stat levels. We get this first area here. Right. We get this middle of the 12-hour. We come down and we get midnight. And notice we're trying to hold. What is this box right here? This is a previous 930 zone. And what that means is a previous 930 zone is it's the 1 minute candle after the open for each of these days that we're seeing here, right? There's one up here. There's one here, one here. And this is telling us on each of these days where the money is. And if you notice, the reason it's important, when we pull, where do we try to stop? Where the money is. That's where the support is that took us up. That's where the support's going to be to bring us down. Right? We pull through this one. We hold this one. We push back above it. We're trying to hold it. We're trying to continue higher here. And we know this. All right? But statistically, with the overnight setup, meaning these boxes, how we trade around these boxes, all right? If you understand the statistical database, you understand what I'm talking about here. All right? So our next stat is to go break this low. So we want to at least see that. And when we do, ideally, we want to dig down into this low of day zone and try to hold, because that tells us the market's doing what it's supposed to do. And notice what else is here, this 930 zone. And that's okay. All right. So we're going to drive down, hopefully here. All right. So we're driving down. We took our next statistical area. So we come in here. We're going to see, now we get in this low of day zone. And now what are we doing? We're going to try to hold and we're going to try to recover. So if we set up a recovery, what is that going to look like? Well, we like harmonics. So we want to see a harmonics set up for recovery. We want to see something set up like this, to pull back and take us higher. Or we want to see something like a shark. And the preference would be to set up a shark if we're going to take this market higher. Now, I don't want to take the market higher. I still want to take it all the way down. But you got to understand, this is how the market works. The market doesn't do what you want it to. It does what it wants to do. So the idea would be to set it up, get that pull again to try to sweep, maybe get into this second zone, because that's your 113 of this break right over here. You want to see it try to hold. Right? This is a second stat low of day zone in the 113. It's a perfect place to try to bounce, to try to get a recovery, get that 5-0 and try to pop out to go get this double top high. All right. So let's let this play out a little bit. We're going to zoom in a little bit more here. Now here we go. We're trying to set up our recovery here. Now, we'll get into what these blue boxes are. Excuse me. These blue boxes are what are called 5 to 9 boxes. So what it is just the size of the second candle of the hour. So this is where you're going to find the most support and resistance typically within an hour. If you push back into it, you're going to find rejection and support when the market's doing what it's supposed to do. All right. And these are just EMAs. So no big deal. We know what those are. So what we're looking for now, as we said, we're going to look for that sweep to go get this 113 and to see what we get here. Now we have a couple of other things we're going to pay attention to as this thing pulls down. We'll get into that in just a second. We'll see what happens on this 113 sweep. Let's see, we're trading around. We're holding this blue box here, right? So we swept it, come back down, and we're using it as resistance now. So, and you'll find the middle of the hour tends to do something similar as well. It can play in this as well. So now we get the sweep into this 113 zone. Now let's see how we react. Not great so far. We're setting up a potential hold, but now we've swept this area, which we do tend to do on these days. We can get into the details of that, but maybe another time. It has how we know that we're going to be sweeping a lot of these lows of days. So now what we're looking for at this point is for this thing, that's not a great hold candle. It's not horrible, but it's not great. So we know we're trying to pump brakes, right? We know that the brakes are trying to pump here. All right, so now we're going to look at the next candle. Yeah, there we go. So what are we looking for at this point? So we have a handful of targets that we're going to try to look at here. We have a couple of things that are setting up. All right, we have, this is going to be the main pattern we're looking for. I'll draw it so we can see it. But for me, when I look for a deep crab, I look for several targets for recovery that kind of line up with everything else. And we'll go through those. So we're going to go back just a little bit, but we'll see. All right. So we're going to draw this first. And we're going to look to get to this 1618 down here. Again, doesn't mean we're going to, but so we know what our targets are for this deep crab, right? Your 1618 is going to be the target down here at 55 or 577, 24,577. All right. So now what we want to look for is where we might bounce and why. Well, inside of every harmonic is another harmonic and another harmonic. All right. So the main thing we're going to look for to try to recover is going to be between this 100% and this 113 of the projection. And then if we continue down, what we want to see is to get the 1618 of the pattern here all the way down to the 1618 potentially of the projection. All right. Now, we know that the 100% was, let's draw this here. So it's going to be right here, the 100% to 113. It's going to be right in here, which, funny enough, gets us into this low of day zone again. It gets us into our tertiary low of day zone. All right. So you'll notice if we look back at the low of day zones, you'll see that you get these peaks. And the reason you get these peaks is that the market moves and these impulse moves, right? And these impulse moves tend to run out a certain distance. And that's why in this data, you get these peaks, because those where they tend to bounce, you'll find a lot of times it's going to line up with a lot of these if you understand harmonics. Now, you might have other levels there, right? There's another 930 zone here. There's another 930 zone here. They're everywhere, right? And it doesn't mean you're going to turn around. It just means that they're a place that could give you some problems on the way to your target. So what else do we have setting up here? Well, we know we had this target setting up here. Now we've pulled through it. But what did we set up? Well, if we zoom in here, what do we have? We have another potential deep crab. that this thing moved beyond the point of a butterfly. Now, it could still act as a butterfly. You could find some resistance at the 272, and it could try to bounce, which it did, but then it set up this continuation. So, and just a candle continuation is what I mean. And again, so when we draw this pattern out, where are we going to look for this thing to potentially bounce? Well, let's draw it out. It's going to potentially bounce, if we're going to get a bounce, right here to here. We didn't get it. Right? We slowed down, but we really didn't get much. Okay? So that's done. That's gone. We've pulled through it. So now we're chasing these additional low of days and pattern completions. All right, we're going to use these boxes as resistance. We're going to do all of the things to make sure that we get down to the closure of this pattern. So we know, let's see, let's go back and make sure. Where's our 100%? So there's our 100% down to the 113. So we got that. So let's see if we can get it. All right, there's our 100% to 113. And now we've swept into this third statistical low of day zone. And we're setting up. That's a nice setup for a recovery, but you don't really want to come down and sweep. You know, again, we're pumping the brakes because we're getting close to the end of this pattern. Okay, people are going to take profit on these impulse moves. All right. So now you want to reject this blue box. Well, what we've done so far is we've swept the previous hour. If we're going to bounce, it's going to be in the first quarter of this hour. It's going to be this first, second, third, possibly into the fourth candle. All right. So if we continue on here, now we've got some recovery. Now we're sitting on top of this. So as long as this serves as support, this thing is going to try to hold and it's going to try to push back and retest. All right. So this is where we have to pay attention. If we're still in this trade, we have to know what's setting up. So what is setting up here? Okay, now we're to live data. So this is a potential pattern to set up a dump. This is live, so we'll just have to kind of predict from here. But we want to lose. Again, we're in the next hour. We got this nice barely, no, we got more than a barely. We got a nice sweep of the hour. We want to dump back through this blue area here, this blue box. And then we want to continue down to our pattern completion if we can get it. Okay, like this is the idea that we're trying to complete this pattern here. Doesn't mean it will, right? But the idea is on the way down, you have to know where to take profit. You have to know where these things are going to bounce. And for me, these are the targets I tend to use. I use that 100% ABCD, the 113 sweep. If I'm just looking for a smaller move at the open, I'm just going to look to recover these statistical targets that we talked about at the open, right? The low here, the midnight, the middle of this 12 hour. And so we'll have to see how this thing continues to play out for the rest of the day. But if we can continue down, ultimately, you really want to take your profit at the 1618. You don't want to expect it to squeeze out the 1902. And maybe there's another pattern. I mean, who knows? But for me, the pattern that I was looking to trade was the deep crab to the downside. All right. So if we recover, how are we going to recover? Well, right now we're setting up a harmonic pattern. We would probably set that pattern up right here. So this is going to take us potentially up to this 886 if we're going to pop. All right. So your target would be here. And then if you continued up, you're going to get back into today's 930. Both of those targets are entirely possible. Just because there's a harmonic pattern does not mean it's absolutely going to complete right now. There are certain time frames you want to see them complete in, but ultimately, that's what I look for. Now, to get into how harmonics, how they're normally played, so Scott Carney likes to trade the reversals. And you know, I wouldn't be the trader I am today without Scott Carney because I use harmonics all the time. Now, I don't typically play reversals. I tend to look for the moves around the open to see how to trade these. But I still trade harmonics nonetheless. And what I've done is figured out on the C to D leg, on the final leg of these, where they tend to slow down and pump the brakes. So again, I knew this thing might actually go up. And if it did, if it goes up and breaks this at the open, well, that kind of negates the idea of this deep crab. But today, the trade worked. And as long as you have all of the data, normally it will. I say normally. More often than not, if you understand what you're doing, it should. Now, one other thing that I look for, if I start taking all of these other things away here, if you notice, there's a standard deviation setup here. All right. So the way that I use standard deviation is I have a certain area that I use standard deviation from every day. And I know, because I've replayed years and years of these, that once this standard deviation, if you notice, it tried to stop here at this 4. So if we zoom in on this, it's basically, this is a 4, this is a 4.5, right? So historically, if we don't hold here and we tend to pull down into this 6 to 6.5, that's my point of no return. I have no interest in longing at that point, because historically, I've noticed that if we pull down through this zone, the market tends to continue to be weak. Now, news or a report can change that in a second, but I'm not interested in that. What I'm interested in is what statistically is more probable. When we get into this 8 to the 10 area, absolutely no interest at all in this thing having any strength back to the upside. Again, still could, but for me, I just don't have the interest in it. So typically, these are the 3 things that I use to look for continuation, to look to stay in a trade, to try to go get an ultimate target. Now, the markets are highly efficient, the futures markets. So for me, my interest is looking for the inefficiencies, and the inefficiencies tend to come at the open and around reports. So the early morning moves and the open is where I tend to trade the most. I don't like sitting in trades for hours and hours and hours at a time, if I can help it. It's not that I won't, I just prefer not to. Now, on top of this, there are other things that I use. I have other tools that I use where this morning, for instance, when we got that first move to the downside, there was a bunch of money sitting underneath certain areas. And I don't use Bookmap for it. I use another tool. But right here, and it wasn't here on the NQ, it was actually on the ES. So looking at the ES, because I have a screen that shows me these things, right? This is what I look at on another screen. I have lots of screens, but the primary 3 things I use are what I discussed. But what I saw is there was a bunch of money sitting here. When the ES dipped into all of this money at this pull around 950, what I started to do was say, I think I'm going to exit my trade here. It was 100 handles. I did great. So I closed out the trade with the idea that if we couldn't go break back to the upside on the ES and the NQ, right? If we stayed below the trend, I was going to re-enter the trade to try to take it down. So that's where these other lower targets come into play. Where am I scaling? Well, you have this pattern set up here, right? So the first scale was this small pattern here. And then the other scale would be what we saw earlier on this deep crab pattern, which was the 100%, right? It was this 100% area right here. And I don't care if I leave money on the table. Doesn't matter to me. So where am I going to exit if this doesn't hold up? Well, if this doesn't continue to reject, I'm just going to get out of the trade because I have no interest in riding it back to the 886. Even if it continues to pull down, I've made my money today. I'm fine. So I'm happy to answer questions about this. I'm willing to talk about it. Like if you have questions, let me know and I'll try to make additional videos. But this is typically what I look for in a day-to-day setup. Now, some days, if I were to go back and say, what if this big thing wasn't setting up here to set up this move to the downside? Well, as long as the data told me what it told me, right, where the first hour and a half to possibly 3 hours we're going to attempt a low side move, I would be looking for targets to the low side, and I would be closing my trades at the harmonic targets and the low of day zones. Because statistically, that's the probability of what's going to happen. All right, so I hope this helps. If you want access to this data, hit me up and let me know. We can talk about it. I'm going to put together some discount codes soon to try to help some people out, because I've had some questions about the cost of it, and I get it. It's expensive, but it also is a lot of work. So just reach out, let me know. I will talk to everybody soon. Hope everybody's doing well.